Hi and welcome, Avi. Today we're going to discuss bridging finance. Bridging finance can be a helpful tool to make a lot of money, but can also be very dangerous. What is a bridging finance? Bridging finance is a short-term loan to buy quickly and when a mortgage is not possible. That is a bridging finance in short. When do investors use bridging finances? So, can be buying at an auction, property not mortgageable yet, you want to buy and refurb and 6 months later sell it, or keep it with a new mortgage, a regular mortgage, you have credit issues. What are the pros and the cons of mortgages? So we'll start with the pros. What are the pros from mortgages? Number one, you can complete very fast, in days, weeks, and that's why people take it out when you buy at the auction, because normally when you buy at the auction you have about 28 days to complete. So with the bridging you'll be able to do that, and with the regular lender nearly impossible. Another pro is flexibility. Bridging lenders are more flexible when it comes to credit issues, or it's uninhabitable structural issues. Basically, you can take out a bridging where a normal mortgage wouldn't be possible. And another pro is it's a short-term loan, so if you can only have it for 6 months, and then you can refinance to when your property is habitable, let's say, you can take out a normal mortgage on it, and you're not tied into a 2 years fixed or 5 years fixed, and you can't exit in those years only with a fee. So it's a short-term loan and you can exit very fast. What are the things to check before you take out a bridging? So, interest rate. A bridging lender normally charges 1% per month for a bridging. It can be a bit more, a bit less, but it's around 1% a month for a bridging loan, and that is 12% a year, which is a lot of money, much higher interest than a regular mortgage. Fees. What are the fees? There are bridging lenders who will charge you for arrangement another percent, another 2%. Every lender is different. Exit fee. They have maybe a 1% exit fee, maybe not. Every bridging lender is different. Valuation fee. Is it a desktop valuation? Physical valuation can be a difference, and they also charge for them. Legal fees. And then you also have to check the term of the bridging. How long is the term of the bridging? Does it align with your investment? So if it's, let's say, the minimum term is 3 months, maximum term is 12 months, and you know your refurb to do up this property should be habitable will take minimum 18 months, then you have to check for a different bridging lender. So always make sure the terms and conditions, the term of the bridging from this lender aligns with your strategy, with your investment. And then what you also have to check is always the exit strategy. What is your exit strategy? Not always, because you can't get a regular mortgage now. Let's say you have credit issues. Why will it change after 6 months when you want to take a regular mortgage? Just make sure that you have an exit and not stay with the bridging forever, because you won't be able to do profit if you spend 12% a year on interest. Let's say again about exit strategy. So exit strategy, I would suggest always have a plan B in place. So let's say you know one lender who will refinance after 6 months for whatever reason, because it's habitable, because your credit issues, let's say you have a CCJ and this will go away, and you know after 6 months you'll be able to get a normal mortgage. I would always suggest have a plan B, have a second lender who will also be able to give you a loan, not only one lender. Or maybe, if it makes sense, you have a plan B to sell the property. Just make sure you always have a plan B to be able to exit this bridging. You can't have a bridging forever, and even if you can, it's not worth it. Another thing which you have to check with bridging lenders, there are lenders who will give you loan to value, and other lenders will give you loan to purchase. It can be a huge difference. Let's say you're buying a property for £100,000 and the value is £150,000. Will they give you loan to purchase 75%, let's say, then they'll only give you a bridging of £75,000. Will they give you 75% loan to value and 100% loan to purchase? Then they will be able to give you £100,000, so you don't need to put down anything. Now, another thing which you have to be careful. A lot of bridging lenders will say or will advertise that they can complete in 2 days, 3 days, in a week. They'll promise, overpromise, and when you come to do the application, they'll start asking you questions more and more and more, and you'll get stuck. And it doesn't take days, it can take weeks and months like a regular mortgage. And if, let's say, you took out, you put down a deposit for an auction, and you're not completing within, let's say, the 28 days, then you're losing your deposit. So when you take out a bridging, make sure that this bridging lender is really doing what they promise they're doing. Ask your friends, family, or go to a mortgage broker and ask him, is this a mortgage broker I can rely on, and will they give me the finance within the time frame I need it? Because not all lenders do what they promise. Just go to a bridging lender. It might be worth to pay a bit more, but to have a bridging lender who will be able to complete within a few days. Let's talk about solicitors. Solicitors, you need a solicitor who is experienced in bridging finance. There are solicitors who will drag and drag and drag days and weeks, and you won't be able to complete. You need a solicitor who is experienced with bridgings, and then you'll be able to complete on time when you need to. Let's wrap it up. Practical tips. Always have a plan B. Work with experienced solicitors. Factor all finance costs into the deal. One thing, bridging isn't free money. It can wipe out profits. Work with a bridging lender who you know, people you trust, use them, and were happy. I had a client 5 years ago. He had £50,000 to invest. He couldn't get a normal mortgage. The reason was because he's a first-time buyer, first-time landlord. It was very difficult to get a normal mortgage. Today there are a couple of lenders who will do that, but he couldn't 5 years ago. So he took out the bridging and then refinanced it after a couple of months, reinvested the money, bought another property, again refinanced, and so on. He owns now 6 properties. The lesson is, bridgings can work and you can do a lot of money from it, but you can also lose a lot of money, so be careful. If you like this video, please like, subscribe, and comment.